were talking about that downturn we've seen in LNG prices. Is this causing you any concern with your projects? How are the likes of Gorgon and Wheatstone going?
Well, Gorgon and Wheatstone are both going very, very well, producing reliably and serving customers. Most of our contracts are done on long-term bases, and they don't necessarily price off spot markets. And what we're going to see in LNG, experiencing right now, is supply comes online in big chunks, demand grows gradually, and so you can see points in time where we have price volatility. And I think that's really what we're seeing in the market today.
What are some of your prospects for investing in the US LNG market or even in Canada?
Well, it's a great time to be Chevron. We've got great investment opportunities around the world. In the U.S., our focus really is in developing unconventional resources in the Permian Basin, where we're seeing tremendous growth. This brings with it oil and gas, and that gas is seeking world markets. Last year, we produced about 300,000 barrels a day there. By the end of 2020, we'll be at 600,000 barrels a day, and 2023, over 900,000 barrels a day. Some of that could make its way into LNG plants and around the world to serve a growing demand for liquefied natural gas.
Mike, when we look at your capex, though, it's still well below mid-2010 levels. Is there a concern that perhaps you're underinvesting?
Oh, I don't think we're underinvesting at all. We've got a really robust queue of capital developments, and we've got growth forecasts of 3 to 4% compound annual growth in our production for the next several years, which is stronger than we've seen over the last decade. And it's really tough in our business, given the decline curve in oil and gas production, to deliver steady growth like that. 2/3 of our capital delivers production in less than 2 years, so the cash flow returns very quickly. And with disciplined capital and growing production, we've got plenty of excess cash to fund shareholder distributions, which is a great place to be.
Mike, it's Rich in Hong Kong. I want to just take a look at the oil market now as well. And as a shale producer, whatever, there was a sort of ceiling that we had for oil prices because shale production would kick in at that point. How have the dynamics changed of the industry?
Well, in some ways, the dynamics are the same as they've always been. And it's a large global market. And at the end of the day, supply and demand, or forward perceptions of supply and demand, are really what sets price. Shale presents a new source of supply. And so I think that's introduced a new dynamic. And you certainly have seen OPEC now beginning to try to respond to the steady and growing production out of the United States with some production cuts. This can be also then accentuated by the announcement of sanctions against certain countries, the problems we see in Venezuela. And so the fundamentals of the industry haven't changed. I think the dynamics of the supply and demand drivers are always in flux, and they're a mix of economic development and geopolitical circumstances around the world.
Absolutely, Mike, and that's what I was trying to get at as well, because shale could come on stream at a certain level, but because it becomes profitable to do so. My point also is, does that mean that we are basically locked in a range of oil prices? Where do oil prices go from here, perhaps in the next 6 months to a year?
Yeah, certainly we've seen some strength over the first part of this year. And I think you need to reflect on the fourth quarter of last year, where there were concerns about global economic growth. And then we'd seen OPEC and Russia bring supply back into the market in anticipation of sanctions on Iran that actually ended up being somewhat deferred. As we moved into this year, those two things have kind of reversed. We've seen encouraging news on the economy, including this week here in China. We've seen some encouraging news. And OPEC has resumed some of their tightening measures. And so supply and demand have become better balanced, and you've seen some strength in prices. Predicting future prices is always a challenge in our industry, and I try to avoid going on the record. But I'd say, we're in the ballpark right now of what we would expect for full year prices, again, with volatility, no doubt, over the balance of this year.
Mike, I just wanted to ask, in terms of OPEC, what's your view on that NOPEC legislation, and could it be a threat to the stability of the oil market?
Well, the NOPEC legislation has been around in the U.S. for a long time, and it never has really been able to get through Congress and be signed by the president. It would change the dynamics, I think, in international markets and international relations, as it removes certain sovereign immunities and could open up legal actions in the United States and retaliatory kinds of actions potentially in other countries around the world, which is why it's never really gone very far in the United States. I think it's always worth watching. Politics are difficult to predict, even more difficult than oil prices, but it's an idea that's never really been able to get all the way through the U.S. system.